Well, it's 1 p.m. Eastern on a Friday, so it must be time for the last word. Courtney, Christy, KP. Hey, guys.
Happy Friday.
How
We made
is
it.
everybody?
We survived another week of tariffs.
Well, I'm
And
not sure
untariffs.
you survived. You're in like a black hole over there. We can't even see you.
It's
I
the
know.
it's the
I-
KP opening 5 minutes. We get the
Yeah,
avatar.
I'm letting the ladies talk first. I just got off of a board meeting with Access Lending Academy, and which I was late for, and Paul filled me in, and then our Mortgage Innovator Conference Planning Committee. We're setting our agenda, getting ready for ICE. I've got my national TPO call that I run for a wholesale correspondent channel in an hour. Like, it is a busy freaking Friday.
I hear you. I missed
Well,
I missed the board meeting. I was on a client demo, so duty calls.
I say here we're getting ready for South by Southwest that kicks off today. So
Oh,
quite the between that and ACL, those are your two big Austin events.
what's let's stay on that. I it's like on my bucket list, right? The South by Southwest. What is the vibe like for the next, what is it, 2 weeks?
Wait, what is it going to be like, or what is it like already?
Well, I'm sure it starts like days or maybe weeks before.
Well, everybody's getting down and getting set up. That was the start of last night, and so you're starting to see there's a setup for the accountant 2. If you saw the accountant, there's an accountant 2 house down
Nice.
at South by. There's a Nissan house. There's a bunch of stuff going up. There's even a I'm going to call it the Christian South by. It's kind of an adjacent event, and the education South by. So there are lots of there's something for everybody to come down and enjoy. I am just going to shoot myself as I go down there today and have to deal with that traffic.
So you're going to dive right in. Good for you.
I am going to the women's networking group this afternoon.
Awesome.
I lived in Austin for 9 years, and South by Southwest is awesome. You've got the music festival, you got tons of live music, you've got a film festival, and then all the other ancillaries that Christy was talking about. It's a fun week. And yes, Austin City Limits Music Festival is pretty freaking sweet too.
Love it. So, I mean, there's no shortage of things we could be talking about that continue to impact our business and impact ultimately the consumers that we all serve. I'd love to just go kind of round robin in maybe Courtney, start with you. Just, you were on with us 2 weeks ago. What's been shaking in your world on the back end of the ecosystem, mortgage servicing, and what are you seeing of late there?
Well, Brian, on the back end of my ecosystem, mortgage servicing is a slowly moving beast. I think that, we'll talk a little bit about insurance later today. I think that, in the universe, I think that at least in my world, I keep waiting to see, the current administration talk about housing or things that will directly downstream impact, right? Some of the things that we're doing, and like net, there's not on the top of the list.
Well, I did see an article in I think it was American Banker yesterday or the day before that talked about the current lawsuit that's going on about whether or not every servicer, including those with the federal exemption, should have to pay some sort of interest on escrow accounts, and how it was unfair that certain servicers didn't have to pay it, but other servicers did, and that there are different rules for different states, and that we saw different trade associations taking a stand on different sides.
Yeah, I mean, I think that's like the way, the truth, and the light in servicing. That comment was for Robbie. It depends on your perspective and where you're coming from. It depends on if you're a bank, if you're an IMB. It depends on, how you feel about a lot of that. But interestingly, learning more about how all vendors use the money that they can hold at different times in their life cycle, not just, mortgage companies and interest on escrow, as we're building these new servicers and things like that. I think that we have to look at those same issues with payment processing companies, by way of example. It's really interesting to see the guts of how these things work and how people are able to, and this might be a KP question, based on how he runs fast on money. But how much benefit an individual entity can bring to itself if it's holding X dollars for even Y period of time. And I think that, that's something that we're going to continue to look at, being a consumer driven everything. It's the reason why I say nobody stays in mortgage servicing in the right mind, everyone. So I understand why all the good guys leave mortgage servicing. At the end of the day, holding as much money as we hold with the cushion, so that we can help those consumers make the payment, and how the calculations work. I think it's a shame sometime when we can't, make sure that the consumer gets that kick.
Well, but doesn't that then increase the cost that you have? Like that's a revenue stream. And so if you take that revenue stream away, just like anything else, you have to look at the monetization. And so if a company is having income in that particular venue, then they're going to have to make it up somewhere else. It's the same conversation we have, to your point, when you look at other providers, when we think about, yeah, well, when you look at the regulations that say, hey, we can no longer charge overdraft fees of X amount. And it's like, okay, well, if that's how the financial institution was making money, they're going to have to make it up somewhere else. It doesn't just mean that, because most companies don't have this excess, they're not rolling in cash and profits. Amen. That money has to come from somewhere else, so something else gets charged. And
right, and I think that I'm just saying that if we are going to in one place give the money to the consumers, we probably should consider doing it in all places and finding that money somewhere else. Or, I mean, I'm the biggest fan of laws and regulations that don't make sense in one quadrant to normalize them across all of them. And so, if anyone in the federal government would like to give me a call, I can give you a list of things that I would like to standardize. We could start with recording requirements across the country. I'd hop there too, because I think that a lot of industries would unwind if there was some consistency there too.
I would agree with you.
I think the only time we've ever got clipped for any kind of regulatory backlash was for per diem interest on accounts in California. And CMG, you guys are huge in California, and there are a few other states that are like that too. But we had to stroke a bunch of checks to people that, we didn't pay timely. And it's always a constant finding that the state follows up with us, but to your point, not every state has standardization. So, and there's all this talk about, well, if the CFPB gets gutted and eliminated and all their 200 contracts that just got canceled and all the people get fired and all that stuff, we're not going to have, one big regulator. We have a bunch of states, but we already have a bunch of states, and there's already a bunch of stuff that we have to deal with all the time that, is regionally specific. Texas is its own animal, California's own animal, Washington, New York is absolutely its own animal. The only state we're not licensed in, and so, there are some states out there that are pretty tough, historically on regulation. So,
and they're hiring. I don't know. It might just be my LinkedIn feed because I used to do that kind of work. But I saw Idaho. I saw, where else did I see? I saw one of the Carolinas this week where recs are circulating for housing adjacent regulatory human in those places. So it'll be interesting to see how active they get and how they're able to staff their. I mean, I think that at the federal level, a lot of times we were seeing them hire contractors to do that. So you have 25-year-old kids with backpacks who don't understand mortgages looking at your mortgage processes. At the state level, I would give a nod to one of my first legal mentors and say it's more of a Marge problem. Marge is the nice lady in the moo-moo that sits behind the desk at the Register of Deeds office. And it's really like, do you have a relationship with Marge? Can you get your document recorded today? It's that kind of thing. And I think that we saw it with, even the COVID money from the federal government and its disposition. Hey, buddy, across the country. Different states were able to get that money in the hands of consumers based upon how staffed and how equipped their, neighborhood association or, adjacent organization was. And in a lot of those states at the time, I consulted with a few states who were setting up their programs. They have 2 people in that office that do everything related to housing, that comes through. You're not going to see that, right? Is tech the solution? Is more power to the state's the solution. I don't know that any of those things are the solution, but here we are.
Yeah, some of the states that you saw are putting out recs are the ones that are catching inflows, right? So Idaho,
Yeah, absolutely.
Carolinas,
Texas.
People are leaving California and they're moving to those states, and so they're getting more revenue, but they're also, they're getting a little overwhelmed in some of those smaller teams that weren't used to dealing with as much banking, mortgage banking, brokering, and the like. That was my 7-year-old son, my second grader Luca. He's not feeling the best today, so he's chilling here on a Friday. So
I
told
love
him,
Friday sick days.
I know, and I'm actually taking my whole family next Tuesday. I'm leaving ICE to pull them out of school Tuesday afternoon, and we're going back to Park City, catch some Wednesday, Thursday, Friday skiing.
Nice.
One last trip this year. So yeah, it's interesting to see all these states trying to step in and regulate some of it because they're overburdened, and some of it they're trying to step into that role of what the CFPB did, which I mean it's really interesting to read the story of how they just went in and canceled all their contracts, and and I mean except for like a couple data and legal services, I mean they have thousands of contracts. I mean imagine if just your biggest client Brian just came in and said, all right, well there's new leadership here, we're going to cancel all your contracts and we'll just sort it out later.
Let me rewind the clock for you. So October,
why you got to set it forward tomorrow night.
October 2008. So I owned a commercial building, and the bank that I worked for leased the office space in that commercial building for the business I ran for the bank. The cool part of that building was the back part of it, which was 90% of the building, was a sports training facility that I set up for some friends of mine to run. That's a side note. Anyway, the bank that I was with was seized by the FDIC, and I learned firsthand how contracts can get terminated with no notice, because my lease was terminated in October of 2008. Now, thankfully, it lasted for 3 months after the bank was seized. But yeah, it's pretty crazy how to your point, KP, think about the contractors that the businesses, the big businesses that are highly dependent on contracts from the federal government that are going to have massive impact in terms of change of business, change of revenue, and then of course staffing.
And I'll kick it over to Christy, but I just the flip side of that is we all did this in July of 22, right? So rates went from the lowest in history in February of 22 to spiking up in June, and our market fell out. So we had 252 vendor contracts at PRMG, and we went through every one of them. And some of them we canceled, and some we renegotiated, and some we non-renewed. And so, the flip side of that is, do you think any contracts were ever canceled in the last 4 years? By our money,
right.
Our money. It's our taxpayer money. Like, I mean, no offense. Like, I'm going to take the same stance I did when the tariff talk started. I'm going to wait and see what happens. And by the way, literally every single person that spoke first said we would have inflation. It's literally the exact opposite. We have disinflation. We have now a shrinking, government, a shrinking footprint, shrinking costs. We have disinflation. The markets are tanking. GDP is down, and everything is literally the exact opposite of inflation. And so I would also take a wait and see approach here with these contracts. It might be a good thing. I mean, I can't imagine that, not to get political, but just, as a point of reference, I can't imagine the last 4 years, the CFPB did anything but grow. The IRS did anything but grow. The government did anything but grow, which means our money is spent over and over and over. And does it ever get looked at? I mean, at least someone's looking at it, And so will they overcut? Yeah, probably. But, hopefully when they find out what is essential to do whatever job they deem they need to do the next 4 years, they reinstitute some of those contracts, which I know some have already come back online, just like some tariffs have already been reversed, So we're just, four talking heads on a Friday afternoon, tagged onto the great Christmas commentary. But I think a wait and see approach is the best approach here, because I think ultimately there could be some good that comes out of this, which is spending less of our money. Because I just want to like throw one more thing. We're broke. We're absolutely broke as a nation. We're broke, and we have the biggest debt and deficit we've ever had, and we're broke. And so you got to cut costs somewhere. And so, at least someone is. We've all been talking about our whole lives, like, oh, our kids and our grandkids are going to be saddled with debt. Someone's finally doing it. Now they're doing it. They're like, oh my God, they're doing it. Yeah, they're doing it a little bit, at a torrid pace, which is unnerving. But at least they're doing something, and that's my take. I'm not saying they're doing it right or well or at a measured pace, but I'm willing to continue to take a wait and see approach like I am with the tariffs.
Well, I think we had the same conversation around we've got to cut and nobody wants to make those cuts and everybody wants to talk about it when we looked at the volume drop off for mortgage companies.
Yeah.
And every lender had the same conversation. Hey, we got to do this. We got to do this. And some actually did the hard work and we're seeing that. And some did not. Some, like CMG, are investing in Courtney to bring their servicing in-house and build something that's better for the industry. Right? No, this way. It's hook 'em. It's hook 'em, Courtney. Come on. Just
I like the Matthew McConaughey version. He's like, he was asked by Chris Del Conte, who you mentioned last week, why he does it like this. He goes, because I want to see those horns looking back at me.
Okay.
That's how I feel. That's exactly how I feel. Thank you, Katie.
I've only been trained one way. I didn't know that there was a this way. I only knew that there was a this way.
Hey, Big Ten champions, Michigan State men's basketball. Let's go green.
Hey, I was with Keith Nichols for dinner last night here at a restaurant. He's a big Michigan State guy. Oh, yeah. He's career capital advisors. Both you and I, Brian, we have some money with him. Yeah, he was pretty fired up about that. And little tidbit. This will now be the fourth time I've ever told it. Anyone that is a Kirk Cousins or Michigan State fan, the Hail Mary when they beat Minnesota, Keith was the guy that caught it. It was pretty cool. And
you know what the play was called? Rocket. No, seriously, that's the play call. Rocket.
He's a beast. He even had some time in the NFL. Anyway, look at our industry. I mean, how long it took us to get 50% of the loan originators out of the business. It took a couple years. It's been about 2.5 years. And if you count bank LOs that don't kind of get counted because they're not really, tracked in the NMLS, the NMLS, it was a 50% drawdown. We went from 4.4 trillion to under 2 trillion. I mean, it had to happen. It took 2 years because, we don't like getting rid of our teammates and our family members and, and we're slow to fire, and because we have a heart. And so our government's been slow to fire. They haven't done anything. They haven't fired anybody. They just grow and grow and grow and grow and grow. And so,
but I think that the real question though, Kevin, is, and nodding to Suha in the comments, can you strategically, surgically, with a metronomic pace, cut contracts and cut expenses in the federal government with a little bit of heart too? And I think that the speed and the uncertainty at a human level is something that is hard to disagree with, even though I don't disagree with a lot of the fundamentals of where you're taking that, right? And so do pendulums always have to swing all the way the other direction to freak people out and make people freeze? Because I think that the people that aren't freaked out are the people that have a lot of money, have a lot of security, and are not working for their next regular monthly mortgage payment, who are in those jobs that are compromised and actually don't know what's going to happen next month. I have a former colleague of mine who got her dream job in the IRS 6 or 7 months ago, went to basic, literally went through to work at the IRS, and the role that she was going to get had to go through the pepper spray training and all of this other stuff. And I was talking to her a week ago, and she's just like, yeah, we don't know. We don't know if we're going to be employed a week from now. A lot of people have, obviously lost their employment as well. And so I don't disagree with your math. But I do think such a raucous support of the position deserves a little bit of heart centering.
Yeah, I agree. And let me just tell you where my heart's at, right? So like, yeah, we're talking macro, we're talking 50% of originators got cut. You know, I don't want anybody bleeding out for them. You know, and so, you know, where I center my heart is in my faith and my health. And so I just got news on Monday that a friend of mine has a terminal malignant tumor in her brain. So she's going to die. And I had a buddy I grew up with who died a couple months ago of heart failure at age 49. And so, you know, where I center my heart is, you know, is like someone's going to find a job. You know, we just created 151,000 jobs. These people will go find a job. They will find a job, and they just going to go out and do it. Yeah, it's unnerving, and it's you know, somewhat heartless to when you look at it and talk about it in the macro. But you know, when I saw this administration take over, you know, I didn't say, you know, cut the CFPB out. You know, I think they do some good, and so I'm one of those that thinks the CFPB needs to continue and operate. Can it change? You know, yes, and I'm not in charge over there, and you know, I didn't, you know, vote to kill the Department of Education, but it looks like they might kill that too. I didn't vote to cut 50% of HUD jobs. You know, that's not what I voted for, you know, so I'm unnerved as well. But when if I'm going to talk about where my heart's at, like these people have their health, they're going to find a job. You know, they're going to go out and find a job in this robust economy that still has jobs out there. And I just spent a day in Sacramento, and it's like it's accepted in government to work at literally a glacial pace. Like we had, you know, 12,500 homes burned and people are homeless, and our stupid state government won't pass legislation to make insurance cheaper. Do it now. Act like we act when we run our businesses. Work. Government employees don't work at that pace. It just in general. And
Well,
so
I think this is
No.
I think it's a good opportunity, KB, to switch and talk about insurance, because this is something that impacts everybody. I think I've shared with this group before that I went to a training and we did this thing called ALICE, which is done by the United Way. And it says, ALICE stands for Asset Limited, Income Constrained, but Employed. And that is 56% of our population that to Courtney's point is living paycheck to paycheck. And we have seen tremendous hikes in insurance, not just in California, but across the US. And that is having a huge impact on the everyday average American and their ability to pay their mortgage. I saw an article yesterday that talked about just have we rearranged our payment process? Because it used to be, think about in 2008, we had jingle mail and people paid their cars. They prioritized that because without their car, they couldn't get to work. And if you're having to choose where your dollars go, today, are people prioritizing their mortgage over their automobile? Or is it like, hey, these two things are top, but my credit card, that other debt that I have, my student loan, isn't going to get paid. But dude, my 2% interest rate, if I get rid of that, I can't go afford to live somewhere else with the changes that have occurred. I don't know, Courtney, what are you hearing on the phone calls that I know you listen to?
Oh my gosh, she's got to be like tax and insurance going up on existing servicing clients. That's got to be brutal.
Well, so I mean, the insurance thing is wackadoodle on top of everything that you're saying, because mortgage servicing and mortgages on 60-plus-year-old systems. The insurance industry is on 60-plus-year-old systems. So when you're talking about like two DOS-based systems like crashing into each other, and like the human spackle in these organizations running after, I mean, you want to talk about inefficiency, KP. Let's talk about the insurance industry and the mortgage industry's technology circumstance. But you know, from a payment perspective, ecosystem, Christy, you know, what we know is that the average American homeowner, consumer, new homeowner has 1.5 mortgage payments in their savings account, just one. And so 2 weeks out of work is a meaningful, you know, time period there. When you add the insurance conundrum to it, depending upon where these people are living, we're seeing real affordability issues based upon where insurance companies are taking rates these days, right? On top of the fact that if you do have an NSF payment in insurance, if you do, any of the reasons why the insurance companies might be canceling your policy, you're talking about hundreds of dollars a month. And I think that it actually, even though we're seeing it, there's 2 puppies that are
I love it.
office right now.
We got Luca, we got dogs.
Yeah, we got everything today. No, but I think that the thing that we really need to look at, interestingly, is a loop back to the responsibility right now on the loan origination, Brian, loan advisor realm, right? Which is when you're trying to get somebody into a new home, you have to factor, I would imagine, if you're being, what you preach, which is loan advisor, not just loan officer, right? For, what is the healthy margin that you have to educate your client on to expect from a insurance increase perspective. Maybe it's regional, maybe it's just based upon your own experience. I know for me, I have a very small second house on a very small lake in mid-Michigan where my policy has been canceled twice in the last year for weird technicalities that I had to reach out to them, and people on the phone are like, yeah, these lake properties, they really just don't want to insure them anymore. And I'm a sophisticated person when it comes to mortgage servicing on top of it, right? Like, I'm like, oh, this is fake news. I'm going to go do whatever, I'm going to do there. I'm more curious. The sales community is very quick to blame mortgage servicing for everything in these circumstances. But when I see consumers that, their insurance payment goes up $150 from a servicing perspective, and they're asking me for a forbearance because they can't afford their payment anymore, I'm kind of like, did they get the right product? Should they have gotten this in the like, what is that margin on the front end, Ryan?
Yeah, I mean, I think where
No, go ahead, Ryan.
All of you.
What we think about and at FinLocker is really the total cost of home ownership, not just what it takes to qualify for a mortgage, right? And so we're fighting with this right now. We're trying to get the best, most accurate estimates for home insurance by property, because we know in our experience certain times what the property is, or at least kind of the area. But yeah, I mean, if I were to put myself back in the shoes of an originator and think as a home ownership advisor versus a transactional based loan officer, I would view my role and my responsibility as really helping that person, especially if they're buying a home for the first time, on, what does life look like after you have the keys, right? Have you planned for the water heater that will go out? It just will. Right?
Christy, yeah, I was gonna say, Christy, I kick this to you because, I think Texas is one of those states people don't realize the real estate tax is pretty high. Let's call it
income tax, right? So
let's call it 3%, right? All in, and that's pretty high. So I would say, at least a couple times a month, I get these deals that come through, and people want to use the 1% unimproved taxes, and not use the actual taxes what they're going to be, and then the DTI doesn't qualify unless you do that. And so again, you're setting them up for failure.
Well, our friend Ira Selwyn noted in the comments that he's seen a 20% increase in his utility bill. So it's not just your homeowner's insurance and your real estate taxes that are going up, but your utility bills are going up. And Ira, I don't know what to tell you about your gas bill. Maybe you should just get a parka, and that way you can bring it down. And I say that with a little bit of tongue in cheek, but we know that people do that. People are in some cases making those choices, and they're having to decide where to put their very slim dollars. And by the way, if you have never done the Alice exercise, I highly encourage you to call United Way Up. This is an exercise that they do. They can bring it into your organization, and it is really impactful to understand what happens. So many of us are so blessed, if you will, that we're not living paycheck to paycheck. But to really understand that, it's absolutely a necessity to think about how this works, and maybe you make different decisions. As an originator, though, I think you're balancing the devil on one shoulder and the angel on the other, because maybe you do want to have this conversation with your consumer and the person that is going to be that new homeowner. However, you're also struck by the fair lending laws that say, hey, here are the regulations, and if they qualify, you legally have to make that loan. So you can advise them on one hand and say, hey, I would recommend, I like a little bit more, cushion or margin, if you will, in my personal budget. How do you feel like your personal budget is? That person may decide not to take you up on that. So it's not necessarily the originator. And I say this from having spent most of my career as an originator. You can have those conversations and talk to people and give them budget worksheets and scenarios. And, they fall in love with whatever house, or there's only a certain price range house available that makes their commute work, that's in the neighborhood where they want their kids to go to school, or whatever the situation is, or they just decide they want to spend on something. It doesn't necessarily matter that Brian has trained them with FinLocker to be a solid loan advisor. Not everybody makes good choices.
Right.
And I'll say in some of those deals, there's compensating factors that, they've got a second job you can't use, or a side hustle on Etsy you can't use, or a spouse's income is there, but their credit is shit. And so that, you take some of those factors into consideration when, on that example about using unimproved taxes on new construction, so there are some things like that Courtney, you make business decisions sometimes on the front end that you're going to service something because the loan's going to perform. But long term, the insurance and taxes going up. I mean, insurance crisis is a big deal, and thank God the California MBA was pushing, and working on that piece, this past week in Sacramento, and that affects everybody. Like your lake policy might be getting canceled by State Farm or Farmers because they're trying to balance their book because they're out of whack in California because they got to pay for complete losses for, poor forest management, no water in the hydrants and no water in the reservoirs, but we're saving a fish. So, these things, they're all impacted, right? Look it up. It's called the smelt fish. They literally let the ice run off on the mountains into the ocean instead of fill the reservoirs to save this minnow. Anyway.
I'm sure that is impactful, but what I will say is you bring up a great point, Kevin, that we have to get out and share our voice and educate the lawmakers. And so here in Texas, we have coming up at the end of the month, we have our Advocacy Day. If you are not registered, please reach out to me. I'll be happy to share the registration link. Look at attending the National Advocacy Day in April with MBA in DC. I hope to see you all there. But meet with your people, educate yourself on the issues, and then be able to educate your legislators. Because if we don't do that, somebody else will be educating them about a fish, apparently, and that could have a negative impact on us.
Great call out, Christy. I'd also add the Broker Action Coalition is piggybacking with Mortgage Bankers Association for their own advocacy event. So,
and TMBA. They're all there on the same week. I'll be up there.
Yeah, I love it. It's awesome. I'm gonna be at back, and I'm working on how to extend to cover at least a little bit of time with MBA. But guys, we are cutting into our commercial advertising time here. I'm being told. No, just kidding. Great. I love having all four of us. This was a riot. We'll have to do this more often. We'll be back next Friday, 1:00 Eastern.
Plus the dogs and Luca.
No Luca. He's got to be healthy and in school. Well, he'll be skiing with you next Friday, I'm sure. So until next Friday, guys, this is the last word. A Chrisman commentary presentation. See y'all.
See you guys. Cheers.